You're listening to Biotech Hangout, a live and unedited weekly discussion of the latest news in our industry with a group of biotech insiders. I'm Chris Garabedian, and my co hosts today are Josh Schimmer, Michael Yee, Nina Kjellson, and Tim Opler. For more information about our hosts and guest speakers or to listen to the most recent episode, please go to biotechhangout.com. So, why don't we start with the breaking news that I think social media is abuzz with the bio group on the Summit data. Summit, last I checked, was down almost 25% for missing overall survival, but the trend was in that direction. They hit on PFS, but it's raising a lot of broader questions about this drug, the target, the competition. Tim, you want to kick us off on that breaking news?
Yeah, I mean, I would say good news, bad news. The good news is that, I mean, this drug's associated with a 20% reduction in the risk of mortality in Western patients. So, like, if you ask me, would you pay money to take this drug? The answer is heck yeah. If I had cancer, I'd be very interested in this drug. This should be a big drug. The bad news is that they missed their statistical significance on OS, but just barely. Like it was 0.0575. So the trial was underpowered. That's all. And you don't know till you know. And you got to remember this drug went very quickly into phase three. That Summit was very aggressive in pursuing their phase three strategy, and so as often happens, you get probably going to have to go back and do some more work. And they have a bunch of studies underway, so that's going to happen naturally anyway.
Yeah, and they communicated that they're not stopping in terms of engaging FDA on this. I think the bigger question is does this make the product less competitive if they don't have the claims? There's been some question of if FDA is going to set a higher bar with overall survival and needing to see that, and the idea that it opens up the door for maybe some of the competitors, right, to argue that this isn't as special, right, as what they might be developing. Any thoughts on that, or anybody else want to weigh in on this?
I mean, just to comment, I think there's no question that VEGF PD-1 is going to become the backbone standard of care in oncology. It's going to be a huge category. And yeah, it's going to be competitive, as one would expect. And we're going to see a lot more innovation. I mean, we're not done with this kind of area. So I would expect, a lot of the evolution now is going to be how does this new backbone therapy get used in combination with various types of emerging ADCs like TROP2.
Yep. Uh, Mike, Josh, you guys want to comment on just the stock movement?
Hey, it's Marty. Hopefully you can hear me. First is that, there were super high expectations going on, so we have a disappointment there on the p-value. Tim's totally right. It didn't hit, call a spade a spade. So unfortunately, that presents a decision to the FDA to make a tough call because they're pretty clear that they do require OS. And so you can say it's close, but technically it didn't. So that's a tough spot they're in, and I think they've emphasized that. I would point out that um, I don't recall what the expectations are, but Astra Daiichi have DXD on for a July PDUFA date, so in 2 months. They do not have a stat sig OS as well, so that's going to be interesting. But also, let's also take a step back and remember that part of the read through here is that the Western and non-Western patient population basically align. And I think that that's also an important thing, although maybe people have gotten beyond that, right? So the non-Chinese population was important. And it was pretty identical, right? 0.80 in the Chinese label versus 0.79 here. So,
Yep. Tim, I'm going to move up one topic you were going to touch on because it's somewhat related. Is the Pfizer deal, another China deal with 3S, looking at getting a PD-1 VEGF. Again, we just talked about the competition. You said this class is going to be huge. Do you just want to speak to that before we go into some of the market dynamics?
I mean, so interesting, right? Because remember, Pfizer had partnered with Summit, and then they turned around and licensed in this 3S Bio asset. I think some people were a little surprised by the high price, but actually, if you think of what I just said, how big the market is, maybe the price was low. Who knows? 3S Bio's actually had really good data for their PD-1 VEGF. It's not the same structure, and so Pfizer's bought Seagen, and now they have a backbone therapy that they can use. They don't have to rely on someone else's clinical development for how they're going to develop all those Seagen ADCs with this new backbone. So I think very astute move by Pfizer. It's frankly surprising to me that some of the other players have not entered the space yet. Maybe this new data will accelerate that.
Absolutely. Well, this was a big deal, but overall, I'd say over the last several years, M&A and these bigger deals has been pretty anemic, and I think we've all been waiting for it. There generally is a inverse correlation when the markets are down, then pharma and big biotech start to go shopping, and you start to see more M&A, but that hasn't really materialized. I know you study this week in and week out, Tim. Just what's the state of M&A? How do you kind of read the tea leaves? And everybody's expecting we're going to see more, and then rest of the year or second half. But every time we predict that, we fall short.
Right. So I was on Biotech Hangout in sort of January, February, with the benefit of being on the investment banking side. So obviously I have some visibility, not full visibility, but some into what big pharma's plans and intentions are. And I was saying we're going to see a lot of M&A in 2025. Well, now it's, almost June, and it's not been nearly the level that I would have expected. And there's a very simple explanation, and that starts in the White House, right? So Liberation Day plus MFN plus overall uncertainty in the macro environment, I think has caused pharma to say, hey, wait a minute, this is not the time to go take our balance sheet and spend it. So there's incredible uncertainty, and that uncertainty I hope will start to get resolved as these tariff conversations get resolved in July. But candidly, at this point, I don't know. So we're just going to have to see.
Yeah. Do you think?
We had actually done an analysis
Yeah,
of
Josh.
pharma M&A trends and patterns, and if you kind of look at the filings and the projected revenue numbers that the acquirers are laying out as part of the deal, those tend to be about 25% above the sell side consensus numbers as these kind of assets run their course. And by the way, those sell side consensus numbers tend to be 25% above reality, right? So basically, firms on average paying or attributing uh, um, 50% too much success on a revenue basis in their projections. And that creates all sorts of issues and distortions, because one might look at that and suggest that the companies that may be most worried about hitting the sell side consensus numbers are the companies that may be most willing sellers and most likely to be acquired. But that is completely antithetical to every investor's general approach, which is to try to find those companies where you think the consensus numbers are actually too low. So, we kind of always fall back into the when is the M&A going to happen? When is the M&A going to happen? I can't even remember the last time M&A occurred in such a substantial wave as to impact the sector more broadly, as opposed to just being a very lucky handful of companies every year that get acquired. And even if you try to limit parameters and kind of focus in on some of those typical target profile companies, for example, oncology, small molecule, late stage, that is kind of the most common um, profile of an M&A target. The problem is there are just too many of those companies out there to go and anticipate which one is going to be bought. So, we kind of keep falling back into this trap of when's the M&A coming? When's the M&A coming? My point is, doesn't matter.
Yeah, I wonder. I want to share a couple factors that might be driving this. So, when I used to analyze M&A targets for Gilead, Celgene, right, across my career, there are two factors that we would consider. One is scarcity value. Is this the only game in town, right? And I wonder, we'll touch on a little bit the crowding around targets, whether it's cardiometabolic, whether it's PD-1 VEGF, whether it's, just the idea that in the China trade, of being able to access other, similar drugs for the pipeline, the scarcity value is few and far between. And then you also have to consider, is this going to run away? Is the valuations going to get too rich and we better strike now? Is it possible that there's just less concern about scarcity value, and also less concern that valuations are going to start ticking up very quickly and start to become overpriced? I wonder if that's creating a little bit, of this pall over kind of the lack of urgency around M&A from, pharma biotech. Any thoughts?
Well, what about the idea that in the past month or two, we have seen early early promising signs from the fact that small companies that don't have a lot of money ultimately did cash in. And you had a couple of privates last 2 weeks, $1 billion for a private company. Yeah, that's the first mass deal by it's like $1 billion. And then you had the rumblings of Akero last week. So, I'm not sure necessarily someone was thinking blueprint or something bigger, but you did have some early things going on and some early rumblings, which I thought is promising because it does take a couple months for things to settle out. You have the earlier, more desperate companies that are willing to go first, and I thought that was promising. You know?
And then
Yeah, I
how many
agree.
how
Look,
many
the
companies have been rumored to be
yeah,
M&A targets that just have not materialized as M&A targets? So again,
yeah.
it may happen, it may not happen. It doesn't matter because it can't shape your investment
Yep.
decision
Yep.
process.
Yeah, I do think the bright spot is that looking at deals that are earlier, maybe even pre-clinical proof of concept, where, look, I mean, these companies have huge balance sheets, they can use their currency, and I think it's a smart strategy to kind of do a little bit of a land grab and help your early pipeline, knowing that everything may not work. And Nina, I know on the venture side, we all are hoping for more of that to potentially exit some of our portfolio companies or programs before you have to read out that clinical yeah, any thoughts,
Well, not just
Nina?
read out, but finance it, right? Phase twos and
Yeah,
phase threes are still not the easiest, although there's so much more, capital on the private side now than say 10 years ago. It's still, it's a long timeline and it's a large nut to be able to run those studies. But I still think, the point about sort of scarcity value and sort of competitive pressure is, I think, the one that rules the day, because I think the reason for pharma to come earlier is if they believe they'll be outcompeted or outbid if they wait. And I think being, that's a good strategy, but you don't necessarily want to be the only bidder for that, phase one pre-POC asset. You can spend a lot of time doing diligence, getting to know it, and then still decide to stay on the sidelines until the next card is turned over. And in an environment where the capital markets are so tough, where the crossovers have basically left the early clinical to preclinical space, and where the IPO window is, for all intents and purposes, closed. There's really no pressure forcing urgency or forcing pharma's hand. So I can understand why
yeah.
why there's a wait and see.
Yeah, we still see the most elusive deal right now is the Series B to get through a clinical proof of concept, even though there's many, many programs that might be deserving of that. And it is a trickle down, right? I mean, the crossovers were filling that gap for many years. But Tim, just, we know venture lags kind of what's going on in the public markets and the hedge funds. And what are you seeing in terms of the dynamics of this downturn and kind of when it might end?
No, it's a great question, and just to touch a little bit more on M&A, and I don't know how encouraging this will be, but it reflects the reality coming into this year. Again, I'm like a practicing investment banker. I'm one of many, so I don't want to exaggerate anything about my own perspective. But I would say that I had a pretty balanced book of M&A projects. Some for big pharma, some for smaller and mid-sized pharma. At the moment, I'm working on a record volume of M&A deals, but they're all commercial. Like every single change of control transaction I'm working on, and there's a lot of them, they're all commercial stage. So buyers right now are looking at the hundreds of commercial stage companies. There's so many biotechs that got their drug approved, and they're just not trading at very good prices. And so from a buyer's perspective, why would you buy the phase two when you can go and buy the commercial asset? And so, for the R&D stage companies, especially the quality companies that are in your portfolio or Nina's portfolio or others, they really have to have something that is exceptional, that's going to change the standard of care in some important area of medicine. And by definition, there just aren't that many of those companies. Now, I think that's part of the explanation of what's going on the M&A side.
And Tim, for as long as you and I have been in the business, the 25 years that I've been in, the mantra of, buy the news, sell the launch, right? Or buy the approvals, short the launch. I think the fact is, aside from perhaps orphan rare, we in biotech and small to mid cap companies are notoriously terrible at commercializing our assets. So often we'll trade or be valued at even less than our phase two, post POC stage. So it's also a nice value, de-risked value shopping opportunity for pharma.
Yeah, no, it's there's just
And
a
ways
lot.
to amortize obviously existing commercial infrastructure with nice little tuck-ins.
Yeah, there's just a lot of it going on, and some of it is pretty chunky, and so I think it's going to be an interesting year. In the past, I've likened the current period to sort of when Reagan was elected. Of course, Donald Trump is not Ronald Reagan, and Ronald Reagan isn't Donald Trump. But there are a lot of similarities and parallels between the macro situation, sort of the end of inflation, a recovery of the economy, this tremendous uncertainty, very divided country. And what you saw from like 1982 to 1988 was a ton of commercial acquisitions. And so those commercial companies don't get fully valued until the market's really recovered for quite a while.
So,
Chris, I
so
did.
yeah,
I didn't
please.
answer your question on sort of hedge funds and macro. So look,
Yeah.
sentiment is not good. I'd love to hear what others like Mike and Josh have to say. The XBI is under 80 today, and investors are really kind of freaked out about the macro picture. And that people, before we're worried about inflation and rates, today's inflation number was fantastic, actually. But now people are just very worried about what's going to happen to this industry with President Trump in office and his ideas, and RFK and his ideas. And I do hope that this gets cleared up in the next 2 or 3 months and things start
Well,
to
well,
recover.
yeah, I want to go to Mike in a minute, but before we do that, I wanted to highlight. So, Endpoints does this biannual survey on kind of sentiment across a lot of variables, but they have a pretty consistent question around the market conditions, both private and public. And I just want to share some. So, the latest survey, which was posted a week or so ago, and they did a video analysis that was posted the other day, but they were the worst sentiments around the market financing environment than they have had in their history of the survey. And it goes back many, many years. I have participated as one of the survey respondents, but just to share some of these data, the question about how would you rate the flow of investments from venture groups today, 59% rated it the worst in terms of poor, and 90% said it's poor or fair. So they had the lowest percentage of respondents that said the VC flow of investments is good or fair. On the IPO front, also the worst in their history of the survey, 94% said the state of biotech IPOs and follow on markets is poor, 6% said fair, and nobody said anything positive about the state of that. Accessing capital, and these are specific CEOs who may be having some favorable response to their specific company. But basically, the worst ratings they had previously were in 2022 and 2023, the first half of about 10 or 11% that said it was not at all confident. This was three times that not at all confident sentiment than the worst ratings they had previously. And again, well over 50% were saying not at all confident or somewhat. And then the last one was biotech valuations was also rated the worst, with the fewest stating that the valuations are average or high, very high. So again, like almost 90% said it was low or very low in terms of valuation. So just to give that snapshot, just done a couple of weeks ago, it feels like the sentiment has capitulated, like we see stocks, and hopefully that's a sign that we truly have hit rock bottom and we have only one way to go up. But Michael, how do you see this? I think you also saw those survey results.
I did see those results. And so we start with the context, since we're supposed to be investors, right? That if the valuations are low, although they've been low for a while, and everybody's very negative, that has been largely reflected, and everybody knows that. And quite honestly, I feel like every hangout is more about when will things start to turn, not necessarily get worse, but things start to turn up. And I do feel like we've just been sort of bouncing around, bouncing around. Although, again, I think at the start of the year, guys, we did have a nice rally, and we just sort of came down mostly because of the tariff stuff, the markets, and really FDA and CBER. The day Vinay came in, I think the XBI was down 7% that day, right? And so that has been a real sort of hit to us. And I just wanted to say that um, in reflecting on that survey, that I'm hopeful that at least in SMID bio, that I feel like while things are tough and the market's tough for sure, that people definitely have been quite bearish on the regulatory environment, what's going to happen with all these innovative companies that, Vinay and Marty are going around trying to potentially ease people and make people feel better about things. I was mentioning that Marty was at Marty's going to be at the Jefferies Healthcare Conference next week on a fireside, and Vinay was at the Goldman thing last week. And so they are trying to ease people's concerns a bit. Obviously, the rubber needs to hit the road, and we need to see PDUFA dates and things. And people are very nervous about the environment. And so I would like to see that part get better for people to feel a little bit better about SMID bio. I don't know whether people think about it.
Yeah, I would say, a couple of things. One, even before the macro sort of uncertainty of the administration sort of MAHA and FDA, CDC, NIH agenda, and even with the backdrop of inflation and rates in the back part of last year and coming into the new year, I do think that we had some, more iatrogenic issues in biotech, and that we had an awful lot of companies that got funded with perhaps not enough substrate to build long-term sustainable companies versus really good trades. And I like the point that Tim made earlier about the crowding around targets and the challenges. I think that was Tim around picking a winner. And when you're not so flush that you can just build your basket around every kinase target or novel checkpoint, and have to be more selective, it's awfully hard to tell companies apart. But one of the things that sort of strikes me that we're also going through now is a bit of a shakeout. We were going to talk a little later, perhaps, about iTeos, which was on the agenda to touch on a couple of weeks ago after they got their TIGIT back from GSK, and with it the future prospect of additional cash milestones. But within 2 weeks of that announcement, and the board declaring that they were going to do the requisite exploration of strategic options, they decided to actually wind down the company and dividend out that cash, sort of following the path of Allakos and Kronos and Third Harmonic. And these are companies with exceptional management teams. In the case of iTeos, over 600 million in cash, and the boards really voted with their wallets to say there is nothing of adequate value, public or private, to acquire or merge with in order to try to create a better return on investment than just dividending out that cash. And that's a pretty interesting, statement, and probably some necessary pain to reduce the denominator of the number of publicly traded biotech companies that investors have to choose among. And there were a handful of VCs that were still, or sort of crossovers that were still in ITOs, for example. So it wasn't just a matter of mutual funds. Um, the only negative of a silver lining to that, of course, a tragedy other than the disappointment on the science side, is in the case of ITOs, it's almost 175 people who will be looking for work, and for whom we will need to have open doors for opportunities and ideas and support.
So Nina, is it a bad sign that they decided to return the money rather than merge with another company that needs the money, including companies that those VCs were already involved in, because you can't really go public, or that they said, hey, we do that, but we don't want to be public because it's not good to be public right now. And so
Oh,
they did not. How do you think about that? Is that a good or a
I
bad thing?
think
Because
I
even they
think
don't see it. Yeah.
we would have had a number of potential candidates lined up to knock on that door, and others, because it's not so much a desire to be public as it is a desire to access tens to hundreds of millions of dollars of balance sheet to advance our private companies pipelines. So I think the the target universe is sizable. I think the challenges are, to the extent that there needs to be a coincident pipe. That pipe market hasn't been there. There hasn't been any interest in that piece. And then the other, if you don't feel confident that you're going to get shareholder support, and if there's a constituency among the holders that say, I would rather have my cash and to decide myself where to put it or place it elsewhere, sit on it until greener pastures, then you're not going to get that deal done anyway. And I think, from our vantage point, that's been the truth in a number of reverse merger efforts. There's been interest
Right.
by the acquirer and by the board to do it, but there's not been
Right.
a conviction in the pipe.
Right. Everyone has to agree and be behind it. And if it's not seconded, it's a deal. Right.
Exactly.
Yeah.
Exactly.
Well, I still think there's also this sentiment that it's not great to be public right now, and so there's this also weighing. There is, I mean, Nina, you said earlier, there's a lot of dry powder in the private equity markets that can support the right programs, and so you've got a lot of companies that are legacy public, right, and they're challenged with market cap, but I think iTeos is a good poster child, at least this week, on the exuberance around certain targets that don't fully play out. TIGIT, being another example of this. But and I think Bruce Booth had a really good blog post called "The Wisdom of Crowds," and how he's basically saying that the crowding around certain targets is a feature, not a bug, and he draws the parallels to tech, where a good idea in tech gets crowded around. And they realize that there's only going to be one or two leaders that emerge, and he's suggesting that biotech's very different. You're going to take a lot longer to figure out if the excitement around certain targets are going to play out in the clinic, and who's going to be differentiated and what those data sets look like, versus you might find that out in a much more accelerated fashion in the tech. But kind of a good idea, and I guess a defense of the crowding around targets. He gives a lot of examples of specific targets where there's literally 100 150 programs that are going on, and not all of those are going to be winners. Before we
Yeah,
move
I
on
think that's a
from
really
yeah,
good point. I would just say,
yeah,
with some of these targets, and much appreciation to Bruce for generating constantly such a thoughtful
yep,
content into our sphere. But I think with a TIGIT, it's sort of like went the way of the PD-1s, that it's an obligate combination asset. It's not expected to have monotherapy efficacy, and it's about destiny control. So unfortunately, in our industry, the good news is sometimes second or third in class can be quite big. But in some categories, in combination chemo, combination IO, you've just got to have control of your own.
yeah.
I like how we go from lamenting the lack of capital to applauding the absolute ridiculous redundancy around the same target with the capital that we do have. Brilliant.
Well, he does reference the whole first in class versus best in class, and essentially, you call anything best in class if you're not first, and the higher risk reward that comes with that. So I mean, we're all guilty of
I would,
going after the
I
bio
would,
better.
I'd also suggest that maybe public market investors are going to have a very different view of than the venture capital investors about that
Yeah,
same topic.
yeah, yeah. They're complementary and somewhat at odds in terms of how
And
they're
yeah,
viewing their baby.
and to be fair to Bruce, like he it was actually a very balanced
Yeah.
dialogue. Like he wasn't just saying crowding is an amazing thing. He did recognize the deficiencies that arise from overcrowding.
Absolutely. Yeah, it was a thoughtful piece. And when I look back, I mean, Bruce's been doing these back to 2011. And so, again, just credit that he constantly is thoughtful, writes these pieces well. And definitely anybody who's early in their career in biotech should, definitely be consuming those blog posts. All right, let's move on a little bit more to the policy. Nina, Michael, there's been, more coming out of HHS, COVID vaccine recommendations, cut to Moderna on pandemic flus. So, some of the policy positions are playing out in terms of, kind of, real action here. Nina, you want to start?
Yeah, and obviously, we touch on the policy stuff, right? Because it speaks to, NIH funding available for early stage research, the regulators, focus on various modalities and indications. And then obviously, and very significantly in the last couple of weeks for vaccines. And that all to, circle back to Tim's earlier point, obviously also influences the sort of the generalist sentiment on and public market sentiment on our industry. But we had sort of two and a half major things come down. One, just touch on it super quickly, is the drop on the 22nd of May of the MAHA, Make America Healthy Again report by RFK and flanked by Jay Bhattacharya and Martin Makary, I think signaling significant sort of mutual support there for the thesis. And this is really sort of following on the executive order. But the things that were striking was a very singular focus on the root causes and strategies for improving the health of American kids, particularly concerned about chronic illnesses, obesity, diabetes, of course RFK, autism as well, and then mental health disorders, depression, anxiety, and a real focus on kind of over medicalization and inadequate sort of surveillance of post-marketing experience with medications, but then also really wanting to look at study of nutrition and diet, environmental toxins, PFAS, and grass excipients, which is where it really touches FDA, and concern on sort of gene environment factors. Surprisingly absent from something talking about childhood and adolescent health and mental health in particular was any focus on social media, screen time, which was big under the last administration, and then obviously also alcohol, tobacco, and other illicit substances. The read through, I think, that's significant is probably a greater scrutiny on childhood vaccines, and that'll tie into both CDC and FDA, as well as some public health education around chronic disease prevention. For NIH, there's a through line, and this is, I think, a very strong priority for Dr. Bhattacharya at NIH as well, is sort of the crisis in replication in scientific data, and the concerns about how much research actually cannot be reproduced, and that leads to mis and disinformation, and misaligned funding, as well as NIH, pivoting some of their research agendas to chronic health and nutrition, and then on FDA, GRAS for additives in food and even medication, and then also childhood vaccines. So that's kind of MAHA, and MAHA will play out.
Yeah. And Nina, I haven't downloaded the report. How extensive and lengthy was that that you got through? Is it how many
It's
pages?
yeah, no, it's a over 100-page document
Yeah.
with citations, many of which have now been shown to be misgenerated by AI. So there's been a little bit of
Yeah.
heat to the administration for that.
Yeah.
Yeah.
And I know one of the things, obviously, besides the Moderna HHS cuts to that, that's a clear signal of, the regime that was kind of applauded and, glorified during the COVID vaccines are, the blooms off the rose there for a lot of those
Yeah,
companies that were
yeah. I
focused
mean,
on
there's
vaccines.
there's sort of new FDA guidelines or guardrails as it relates to both COVID and flu vaccines. Most notably, wanting to see placebo-controlled trials for vaccines that would be commercialized to the under 65 um,
Yeah.
population. Now, this begs a lot of questions about how you will do placebo-controlled trials in healthy and minimally symptomatic flu and COVID individuals. But the other emphasis is looking at endpoints of relevance. So not just your, viral titers confirmed by lab or your patient or clinician reported symptoms, but actual hospitalization and deaths as
Yep.
being sort of the only real prophylactic justification for vaccinating in those populations. And the read through to Moderna, is whether or not with their by bifunctional flu COVID
Yep.
vaccine, whether or not in particular they're going to have to do prospective phase 3 placebo controlled studies in the 50 to 65-year-old population. And they withdrew their BLA and they plan to refile next year, but that's a little bit of overhang for them. And then, of course, the bigger overhang was the NIH's decision to stop supporting an mRNA vaccine for avian flu, which continues to be a really big problem. 50, 60,000 chickens, 50, 60 million chickens have been killed
Mhm.
in the last 3 months to prevent transmission. But on the other hand, bird flu is 70, 80 cases in humans, but it's not particularly pathogenic in humans,
Mhm.
or of great concern. So it may be a decision to say that juice isn't worth the squeeze, although it's
Yeah.
about $750 million to Moderna. So definitely
Yeah.
some juice squeezing there.
Well, one thing I saw McCary comment on, which I think is a thoughtful perspective, is when you do the studies, the actual respiratory pathogen can evolve and cannot be as relevant for the way the initial studies were. And it seemed like he was trying to figure out how to solve for that, which I don't know is an easy solve. But the COVID that we're dealing with now is very different than the COVID when the original vaccines and boosters were developed, and so yeah, at least they're putting some energy and attention into what is most relevant for the pathogen that might be circulating today. So
And
it'll
that's
be
fair,
interesting
and
to
that's
watch.
fair for bird flu too. There
Yeah,
have been a couple of new strains that have emerged there as well. But I think the rationale for particularly mRNA vaccines is that it can, follow a little bit like flu, that
yeah,
there's a point in time where an expert council deems, such and such strains to be those most virulent, most
yeah.
relevant for a particular season, and there isn't a requirement to do,
Just
forward
plug in
projection
the
studies.
sequence. Yeah, if you know the
Plug in
safety's there.
sequence.
Yep,
Yeah.
yep,
Now
yep,
the question I think is whether or not, and this is mentioned in the CDC statement, is whether or not the same seasonality applies to COVID as it does to flu, and COVID can be pretty active in the summer months as well. So is there that same sort of opportunity to pick and pivot?
yep. Michael, you want to comment anything further on the policy side?
Well, from the biotech side, I mean, I read over the Maha report, and I think a lot of it focuses on things that are uh, food, agriculture, et cetera, et cetera. And so that has been a historic big focus point for them. And I'm not too overly concerned about that as it relates to the biotech stuff. On the biotech stuff, yes, the vaccines part, which is still a bit of a niche area for biotech overall,
Yep.
is definitely under siege. I think that's pretty clear. It's going to continue to be very difficult for the Moderna team and others to navigate that as an executive team and as an R&D investment decision team. How do you make decisions and where we're allocating capital? And by the way, Moderna has a PDUFA date, I think on Monday or falls on the weekend. So we may hear from them today, by the way, on the new Moderna bivalent vaccine that has a PDUFA date for the refrigerator safe version one. So let's wait to hear from that, ironically. And then, yeah, like how do you decide what to do with this flu COVID thing? So this is very difficult in that whole area. And it's pretty clear that Marty and the others are going to make it pretty difficult for new vaccines. So that's why I go back to what does it mean for this administration and for us? Just how is these things going to shape the regulatory approval for new drugs, new cancer drugs, new rare disease drugs, new autoimmune drugs per se. And I'm hopeful that over the next 6 months, we find out that it's not too abrasive for that area, which we're primarily focused on. So
Yeah,
I'm hopeful.
Michael, the
I'm hopeful.
Gilead PDUFA date, is
Yeah.
that a
Yeah.
signal that we
Thank you.
should be looking at? You want to
Thank you.
comment?
Thank you. So I believe that, um, uh, well, I would think most of my peers here agree that PDUFA dates going well are a good thing and says that we're along the right track. It's pretty hard to invest if you can't even get the PDUFA dates going. And June 19th is the Gilead breakthrough therapy PDUFA date for the lenacapavir HIV PrEP drug, the once every 6 month injection for the 99 to 100% prevention of HIV, which I think everyone in biotech agrees is pretty overwhelmingly obviously positive and a good risk benefit. But it is a important PDUFA date because it's an obvious one. And we want to make sure that there's no FDA delays, resources or otherwise, right? A lot of headcount Doge concerns. Number two, that it was a very fast review within 6 months. So can they do this all within 6 months? And three is it's kind of the only big PDUFA date that I'm aware of this year that impacts up to 1 million people. And kind of that scene like where Makary and others have been very focused on these big markets where do we have enough safety? Do we have enough phase 4 safety? What does the safety database look like to where you find these other things that pop up like myocarditis in the vaccine later on? And so I'm a little bit nervous about whether they make this difficult or not. And so I do think it's an important barometer to make sure everything's okay. Add to the fact that I don't want to spend a lot of time on on RFK's book and the comments about HIV, which sort of adds a whole other realm to this. So looking for positive things, and I do think biotech would like to see that go right.
Excellent. Um, so let's move to the data front. What's been happening this week? Josh, Rocket Therapeutics. Again, some not so great news. Do you want to provide an update on that?
Hey, Chris, while we're waiting on Josh, I wanted to comment a little bit on Mike's comments.
Yeah, please. Yeah.
Mike, I really like what you just said, and I also like what you said when you were talking about Moderna versus BioNTech on a previous episode, where you kind of noted how different the investment decisions were between the two companies coming out of the pandemic. And I don't think at that point we would have anticipated what has happened with the Trump administration vaccines. But boy, I mean, you really feel for Moderna in a way that they bet the farm on vaccines, and now they're facing
Yeah.
this administration. And I personally just wish them well, and hope that they can kind of figure out how to get their pretty interesting portfolio through the FDA. And I do worry about what's going to happen with that company. The other thing I wanted to say about the Maha, go ahead.
It is quite striking, right, Tim? We talked about how it was a complete divergence of one company which is
Yes.
all in on respiratory vaccines, all in, and the
Yep.
other company pivots to being all in on cancer, including, by the way, VEGF PD-1. And you couldn't have called opposite directions. So I do feel bad, and I hope, and I'm telling you from investor feedback that Moderna, with all due respect to these guys, everyone's got a lot of respect for them, that they got to make some tough decisions, right? Because they're burning a lot of cash, and are they going to continue down that path, or are we going to have to make tough decisions given the environment?
Yeah,
Yeah,
for
and
a
this
$10 billion market cap company to be, burning almost 4 billion a year
Thank you. Yep,
is tough.
it's tough. You got to make some decisions. Yep.
Yeah.
yeah,
For
they're
sure.
sitting on 8 billion in cash, but who knows, what's going to play out there. I mean, they could end up, they're not careful, being the next Bluebird.
There are probably a couple of venture firms they could acquire.
There you go.
All right. Well, let's. Josh, I didn't realize dropped off, so we'll come back to a couple topics if he comes back
And
on. But
and
let's move
and
to some.
and Chris, I wanted to make one other comment coming back
Yeah,
to
please.
the very nice comments that Nina made about the Maha report. So one thing that struck me in the really isn't getting a lot of conversation in our industry is the focus on autism. And you know, for whatever reason, RFK is very focused on autism. I don't know if maybe he has personally been impacted by the disease through his family or something. I don't know. But what I can say is I'm personally fairly connected into the KOL community in autism, and they are talking to the right people. So sometimes he sounds a little bit loopy when he starts going on about autism, but they're serious. And autism is, as was pointed out in the Maha report, a very consequential disease. Doesn't get a ton of attention from our industry, and I would hope that maybe all of this will cause more investment to go into that field.
Yeah, it's interesting. Every company with this kind of regime change and different priorities, many of our portfolio companies are seeing this as opportunities to engage with the kind of new leadership, and maybe has a technology, maybe in the pediatrics. We have a company that's in the NICU, right? And the idea that, hey, this might be even, more favored, right? And if you're safe and all of that, and you can do the right studies. So again, for every company that might be groaning, right, of this being a more difficult pathway, I think there are companies that are seeing this as opportunistic to try to work with the new leadership. Just following on the point of your kind of autism focus.
Yeah, Chris, I think it's very much a both and. I think it is an opportunity for shining a brighter light on etiology of autism. Hopefully, hypotheses much broader than vaccine or vaccine adjuvant, and to look at improved access of care there. While also, I think it's really important. Quote unquote, vaccines a pretty good idea. that we stand for vaccine prophylaxis where appropriate, and building the evidence base that supports that as well. Which prompts me to say I do think that administration, particularly at the FDA and at NIH, are very keen to hear feedback. We as an industry, certainly this is true of my portfolio companies, are very shy to go on the record with constructive criticism or feedback to the agency, because there's a fear that that might be taken down as a note and come back and bite you later. But there is a very ardent effort underway through Bio to help stakeholders, to help private and public companies find audience on a listening tour with Martin Makary and other members of FDA. So if you haven't caught wind of that, please feel free to DM or reach out to me, and I can help facilitate, because I think it's really important that we provide thoughtful, anecdotal, real, genuine input here.
Nina, I 100% agree with that. And shame on us if we're too afraid to give constructive feedback. The fact that they're asking and they're going on a listening tour, I mean, I think as long as it's constructive and not like antagonistic, et cetera, I think they really want to understand the perspectives. And I think the companies that lean into that actually have a chance to do better because they give that feedback and they might be listened to. So, yeah, I don't think we should adopt that. Oh, we might upset somebody and they might come back to bite us later. So yeah,
Yeah,
I
and
just
we
want to
we
reinforce that.
forget sometimes when we're in it how complex our industry is,
Yeah,
and even people as sophisticated as those who've come into these leadership roles, they will not know everything about drug
yeah,
discovery and development.
yeah. Let's move to some data readouts. Nina, you want to start with Prothena, and then I think Mike and Tim might comment as well, or anybody. Nina, you're
Uh,
on mute.
I'll I'll fill in unless Nina hops
Yeah,
on. I mean,
Michael,
I
please.
cover Prothena. I've covered them for maybe a decade, and what a
Wow.
rise and fall and rise and fall and rise and fall, and now we're $4 or whatever. But this was a uh, 5 years ago, a very, very big situation with this antibody for AL amyloidosis, light chain amyloidosis, not TTR amyloidosis. And they were supposed to be positive. And 7 years ago, it stopped at a futility analysis and failed miserably on a futility, those. And they found a subgroup analysis years later, redid the study again based on the subgroup. And here again, failed again. So it's just been a very tough situation for them. It was a wide, I don't say widely, but major phase 3 cardiovascular amyloidosis readout, and sort of go back to, well, man, uh, bit us again when you do a subgroup analysis post hoc. Here we go again, and well, didn't work again. So
Yeah.
just one that was a big news, and obviously, again, another stock not trading below cash. And they've also said that they are evaluating all scenarios, because I think they're sitting on about 300 million of cash and the stock bids below that right now.
Wow. Nina, you want to comment or
Yeah,
Tim?
so sorry, I couldn't get my mic back on.
Yeah.
I
Yeah.
would just say that I do think it. I mean, it is an unfortunate and sort of spectacular phase 3 setback for Prothena, but I think that there is still a fundamental thesis in AL amyloidosis, and it may not have been the perfect antibody for that indication. It wasn't quite designed to go after ALA, but rather SAA. So that combined with some patient to patient variability in the trial with respect to protein probably suggests that there's still a worthy hypothesis to test here in going after this indication and this protein aggregate with an antibody.
Yeah. Um, Nina, I want to touch on we always get these news events that give some hope to those who are focused on infectious disease antibiotics. And Spiro was one of those companies that was formed during the boom times to focus on antibiotics. And it's been a really big challenge to invest in that area as venture. But they had a phase 3 data readout and a GSK deal. You want to speak to that and maybe what it sends a signal for or not?
Yeah, I'm not sure about signaling, but as someone who's made some nice returns in anti-infectives, and as a citizen has lamented the fact that we don't have more development of antibiotics, given the perniciousness of drug resistance, I was kind of happy to see this, and it's sort of neat on a couple of fronts. One, Spiro's got an oral carbapenem. It might prove to be the first oral carbapenem, which is exciting. And they had a partnership with GSK to develop this in complicated UTI. This is a hospitalized population. So one of the slivers where anti-infective development is particularly challenged is for the hospital marketplace, because hospital formulary makes market access so challenging that the ROI for a venture investment is tough. But they've done a nice job here, and they actually stopped a 2,000 patient study early, a placebo-controlled study or active controlled study, and hit non-inferiority. And the data safety monitoring board said, "Hey, you guys are good to go without enrolling further," which is nice. And so GSK will owe them $150 million milestone for that.
Yeah.
And Spiro just soared as a consequence. I think when I last looked at it, it was up 215%. So good on them for sure. And GSK obviously remains a company that's still in the game of anti-infectives.
Yeah.
They have a recently launched uncomplicated UTI
Yeah.
drug called Bijugo. That's a novel mechanism, and they really took that from bench to bedside.
Yeah. So Nina, I mean, as venture investors, right? I mean, one of the things that we have to look at is how many and what natural acquirers are there for M&A, and what does the IPO market show in terms of comparables for? And this is why I think a lot of VCs do shy away from anti-infectives and antibiotics. Where I mean, people are still pointing to Cubist being acquired by Merck,
Yeah.
right, back in the day. And so, like, how much does that weigh on, even if someone sees a great technology, the fact that the odds of not having many natural acquirers and not having great comps on the IPO market weigh in the decision not to invest in cutting edge anti-infectives?
I mean, I think that is the huge barrier. I mean, anti-infectives have a much higher probability of successful translation once you're through phase one safety and don't have anything, untoward or unexpected. Your likelihood of, in vitro microbiology translating to clinical is higher than in pretty much any other indication. And the actual epidemiology would suggest that the unmet need is quite high. If you've ever had a loved one suffer from an intractable infection and go through second and third antibiotic and go from orals into IV and maybe even from outpatient to inpatient, you know that we need more armamentarium than we have. But it's just really tough to make that case. There's been a lot of initiative. I sound like a policy wonk again, but there's been a lot of initiative historically to make the FDA more flexible on superiority versus non-inferiority
Yeah.
margins. And we also benefited for a while from pretty significant BARDA funding to support the development here. And those are, those are intangibles that can make the risk a little bit, easier to take.
Well, and it does also, you wonder if the new administration, if they're weighting less vaccines as a preventive, vis-a-vis the risk benefit, are they going to start to realize, well, we do need therapies and treatments, and we need to incentivize that for when people do contract these infectious diseases, if there's going to be less preventive. So it'll be interesting their ultimate policy position on this category. So Nina, Josh was going to, I don't think we're going to get Josh back, but he was going to highlight Gilgamesh and the kind of boom in in the psychedelic space. And I know you've been following that as well, and have some comments. Do you want to comment on just any of the news coming out of the psychedelic space?
Oh, I wish I could say I've been following that space. No, I was very keen for Josh to educate and
Yeah.
inform us. I had just taken note of a recent print last week of the Norex founders coming at it again with a venture-backed private company with some strategic, Lilly and Abbott money to do the next gen NMDA PAMs. So sort of small molecule with somewhat of a analogous mechanism of action as the psychedelics. But I would have to defer to smarter,
Yeah.
groovier people to take the psychedelic question.
Yeah, if anybody wants to touch on the Gilgamesh news, feel free to weigh in. But I mean, here's the thing. This is one of the areas that RFK Jr. signaled part of the mental health, but he in part of his platform was highlighting that, and we're seeing the investment kind of follow in that space. It'll be interesting to see how that sector evolves. Anybody else want to comment on the psychedelic space?
I'll just make one comment. I had a very interesting conversation last week about all the success that J&J's had with their ketamine molecule. So, they've crossed $1 billion in sales, which is impressive. And the way it's working is quite interesting. They are essentially working with pain centers. So they're helping pain centers get into business. Back in the day, pain centers might have been pushing some of the wrong drugs, more opioid type drugs. And so J&J spent a lot of time sort of training outpatient pain centers how to use their molecule to really get good results for patients. And the results have really been spectacular. The way the reimbursement works on the J&J drug is also very interesting. And so it's the services that the centers provide and the drug itself are all sort of packaged into one payment. And so that provides those centers a way of capturing profitability, which is one of the reasons the drug has done very well. And we all know in our industry, incentives for providers matter a great deal in terms of how much the drug actually gets used.
And of
Right.
course, time to efficacy or lack thereof is also very rapid with the ketamine and presumably the next gen catalogs. And that also is a potential system savings because you don't have patients empirically going through a number of different oral agents waiting, a couple of weeks to see if they get benefit.
Absolutely. Michael, let's pivot. There's a big week, big few days ahead here with ASCO, and then you've got the Jefferies Healthcare Conference as well. Why don't you speak to what's going on over the next week?
Well, I'm at an airport waiting to go to ASCO. Maybe Josh is too, but obviously ASCO, which I guess in the relative scheme of all of our years doing this combined is a relatively lackluster ASCO. Yeah. I guess Summit is also hosting a thing, so we'll see what they're saying on Sunday. Although their data is not at ASCO. So there's a lot of mid cap stuff there. Maris was the big one. I don't know if you guys talked about that. Well, I guess not because that abstract just hit about their head and neck data, which was a big splash. That stock is now approaching 5 billion market cap on the head and neck indication and other indications as well. So that was a splash at ASCO. We're following the DLL3 space. Obviously Amgen's tarlatamab is can have survival data there. It's going to be $1 billion drug for Amgen, and Zai Lab and also IDEA are fast following them with some better drugs. And Zai Lab has got some DLL3 data there. So a lot of incremental mid cap stuff there, but a relatively lackluster, I guess, ASCO from a big picture standpoint. And then, look, hopefully the tone next week at the Jefferies Healthcare Conference will be a stepping stone to the second half of the year. I'm sure all of us are looking for a better second half. We're crossing over summer here. And Marty Makary will be at our conference on Thursday. And let's hope that he has some positive things to say to the industry and hopefully releases some anxiety. And like I said, they're on a listening tour. And I think, again, from a stock performance perspective, which is what our job is, I think that there's probably only some relief for the second half of the year. So I'm optimistic about that. And hopefully Marty talks to a bit about his plans, and that's not to derail the industry. So let's hope for a good week. Yeah.
Yeah, that's great. And look, you got to give McCary credit for being out there, and he's a good communicator. He's been in multiple forums, and I think the FDA, we do need someone who communicates with transparency and with intention. Scott Gottlieb was really good. We all applauded him as a communicator. So I think it's good to have a leader who can be articulate, who can explain things that we might disagree with. But yeah, I'm encouraged to see what the feedback is from everybody after the listening tour.
I
I'm
mean,
sure social media will be a
yeah.
buzz. Yeah.
Well, you're all right. I mean, this is one of the most regulated industries. Here is the head of the regulatory body. And it's good that we have a transparent, I'd say collaborative, or at least working relationship with the industry and with the regulators, right? And that they're out there and speaking about how the framework is going to be for the industry. And I think that's a positive for sure. Right?
Yep. Yep.
Good.
Hey, Nina, last topic. Do you want to touch on this whole Regeneron acquiring 23andMe? And I mean, it's been a long, but any perspectives you have on that for our industry?
Well, I mean, I think Regeneron has been a genetics-based drug discovery target and drug discovery company from from inception. So there's a lot of logic to their interest. I think they prevailed in bankruptcy bidding against Anne Wojcicki, founder and CEO of 23andMe, who continues, I think, to have a passionate conviction in the ability to build value there, and has challenged the sale to Regeneron. So that's a saga to watch play out a little bit in parallel. And this is the reality for the whole field of privacy and genetic information. There's a rider and a bill in Congress that's seeking to provide incremental protections to consumers who may have genetic data on deposit with 23andMe, to make sure that in a bankruptcy proceeding, and this would apply obviously not specifically to 23andMe, but to situations like this, that there are protections for the identifiable information. And we could have a separate, much longer conversation about, isn't just about anything in sequence potentially identifiable in today's day and age. But at least this is, name, date of birth, address, social information that would be protected.
Thanks for that. Before we close, any other final comments from the co-hosts?
I would just say I'm all for what Regeneron's doing. They've really done a nice job of identifying novel targets from de-identified genetic phenotypic data sets, and hopefully they'll be able to continue to do that with 23andMe. So bravo for them, and I don't see any particular threat to patients from what they're proposing to do.
Great. Well, I want to say thank you to my co-hosts, Michael, Tim, Nina, and Josh, who dropped off for a great session. And thank you all for tuning in to this episode of Biotech Hangout. We'll see you on the next one.